Hello and welcome to the NatRoad webinar on superannuation. Staying on top of super is essential for every transport operator. This webinar will cover the basics of paying superannuation and avoiding common mistakes that lead to costly penalties. You'll also learn practical tips and tools from the ATO, including how to steer clear of the Superannuation Guarantee Charge. Joining us today is Jen Madigan, Director of Superannuation and Employer Obligations team at the ATO. Jen has more than 25 years of experience at the ATO and will be sharing valuable insights to help you meet your super obligations. Over to you, Jen.
Thank you, and hello everyone. Thank you for your time today. I really appreciate this opportunity to speak with you about your super guarantee obligations. As employers, you have a range of responsibilities, and today we're going to take a practical look at your super obligations, what they are, why they matter, and what you need to do to get them right. We'll take a look at the basics of paying super, common errors and how to avoid them, payroll governance, what happens when mistakes are made and how to fix them, and finally, what we know about payday super so far. As an employer in the road transport industry, you're required to pay superannuation for eligible employees by the quarterly due date. This is known as the Superannuation Guarantee, or SG or super for short. Superannuation isn't just a formality, it's a legal requirement. So it's vital to understand your super obligations as an employer and how it applies to your business. We want all employers to get it right to ensure employees receive their correct entitlements. So if you employ staff, there's 3 key things to remember. Make sure you pay the right amount of super in full, pay on time, and pay to the right super fund. So who is eligible for super? Well, the short answer is almost everyone. Full-time, part-time and casual workers are generally covered. For workers under 18 years of age, you must pay super if they work more than 30 hours a week. Eligibility also includes temporary residents, such as backpackers or visa holders working in Australia, international workers employed in Australia, domestic or private workers such as nannies or housekeepers, and company directors and family members working in a business. But importantly, contractors with an ABN may also still be entitled to super if you're paying them mainly for their labour. Even if someone is hired as a contractor, they may still be considered an employee for super purposes if the working arrangement is primarily for their personal labour and skills, and they are paid for time worked rather than results delivered. We have general guidance on how to classify workers on the ATO website, and this includes specific examples for the road transport industry which show the differences between an employee and an independent contractor. You can find more information about this at ato.gov.au/employee or contractor. Working out if an independent contractor is eligible for super can be difficult to understand. There's resources to help, including a taxation ruling, TR 2023/4, which is called Income Tax and Superannuation Guarantee, who is an employee. And we've also got Practical Compliance Guideline, PCG 2023/2, on the classification of workers as employees or independent contractors, which outlines our compliance approach in this area. But if you're unsure whether a worker is eligible for SG, the ATO also provides a super guarantee eligibility tool to help you work this out. And you can find this at ato.gov.au/SG eligibility. And of course, you can also seek advice from a tax professional. Let's talk about how much super you need to pay. You calculate super by applying the SG rate by the amount of ordinary time earnings, or OTE for short. OTE includes salary and wages for ordinary hours, shift loadings, allowances tied to ordinary hours, and most commissions. Overtime outside ordinary hours usually doesn't count. One thing to remember is that the SG rate increased to 12% on the 1st of July 2025. And this must be applied to all eligible payments to employee funds made on or after the 1st of July, even if part of the pay period fell before this date. So make sure your payroll software is updated to reflect the new rate. To calculate super manually, you multiply the employee's amount of OTE by the super rate applicable at the time of payment. For example, using the current SG rate of 12%, if you pay an employee $3,000 in OTE, the super guarantee contribution would be $360. I also recommend using the Superannuation Guarantee Calculator to help calculate your contributions, and you can find this at ato.gov.au/SG calculator. Let's talk now about key dates. You must pay super guarantee by each quarterly due date, but you can pay more frequently to help manage your cash flow. Super must reach the fund by the quarterly deadlines, which are the 28th of October, January, April, and July. Now we've just passed the last due date. Contributions for the July to September quarter were due on the 28th of October. If you miss this date, you will need to lodge a super guarantee charge statement and pay the SGC to us by the 28th of November. I'll talk a bit more about super guarantee charge later. But the next quarterly due date for your super contributions is the 28th of January 2026, and that's for the October to December quarter. Remember, super is only considered paid on the date it's received by the super fund, so build in a buffer to make sure it reaches the fund by the due date, especially if you're using a clearinghouse. All payments must be made electronically through SuperStream, sending both the money and the data together. Most of you will use payroll software, a clearinghouse, or the fund's own system to do this. When it comes to paying super, the golden rule here is simple. As I said before, pay in full, on time, and to the right fund. If you can do those three things consistently, you'll avoid most of the problems we see in this space. Let's run through some of the mistakes the ATO sees most often and how to steer clear of them. Examples include not paying the full amount, so using the wrong rate or not paying to all eligible workers. As I touched on before, misclassifying workers, particularly contractors, is a common mistake we see here. But we also see people miss the quarterly due date, particularly when using a clearinghouse, paying to the wrong super fund, having the wrong employee details. Small errors like a wrong date of birth or fund number can see super payments bounce back. Not updating payroll systems as the super rates change, resulting in an underpayment. Remember, the last increase in the SG rate to 12% applies from the 1st of July 2025. And finally, delays in receiving choice of fund information for new employees. Even if your employee doesn't provide you with their choice of fund information before the first super contribution is due, you must still pay their super contribution by the quarterly due date. If there are delays in receiving the choice of fund information, you will need to make your payment to your employee's stapled fund or your default fund by the due date. These mistakes can lead to compliance issues and penalties, so regular audits of your systems can help catch and correct errors early. At the ATO, we want to help you get your super obligations right the first time so that you can avoid additional paperwork, charges, and penalties. You can avoid common errors by doing the following. You can pay in full using the current super rate of 12% for all eligible workers, including some independent contractors. You can also pay on time. SG must be paid by the quarterly due date, but you can pay more frequently to help manage cash flow. Remember, super contributions are only considered to be paid on the date it's received by the fund. You need to allow enough time so payments reach the employee's super fund by the quarterly due date. And this is especially important if using a clearinghouse. So check how long their processing takes and make sure that you allow enough time. Pay to the right super fund, which is your employee's chosen fund, or if your employee doesn't provide you with their choice of fund, you need to contact the ATO to request their stapled fund details. And finally, you should verify that the employee details you're using are correct when they first start working for you and regularly check they haven't changed. This will help to make sure the super payments are received by the fund on time because super funds will reject payments when details like the employee's full name, date of birth, TFN, or super fund account information don't match. Now, one area I really want to highlight is what happens if you don't pay super correctly or on time. And that's the Superannuation Guarantee Charge, or SGC for short. The ATO takes non-payment of super seriously. If you miss a payment or underpay super, you will need to pay the SGC, and that will cost your business more than just the missed super. If you've made a mistake, you need to lodge a Superannuation Guarantee Charge statement by the next due date. The due date for SGC statements is 1 calendar month after the missed quarterly SG payment due date. So for the quarter that's just ended, the due date for the SGC statement is the 28th of November. You'll also need to pay the SGC to the ATO, and the SGC amount includes the shortfall, which is calculated on total salary and wages, not just OTE. It also includes 10% nominal interest and a $20 admin fee per employee per quarter. And remember, unlike super that's paid on time, the SGC is not tax deductible. So not only do you pay extra, but you also lose the tax deduction you would have had if the payment was made correctly. When margins are tight and admin time is limited, these costs can add up fast. So getting it right the first time saves you time, money, and stress later on. If you realise you've missed the most recent super guarantee due date on the 28th of October, make sure you lodge an SGC statement and pay the SGC to us by the 28th of November. Additional penalties up to 200% of the SGC may apply if you don't lodge the SGC statement with us and pay on time. We have more information available about SGC on our website at ato.gov.au/SGC. Strong payroll governance is critical to keeping transport operations running smoothly. We see many freight businesses with gaps in their payroll processes, especially when it comes to super. At the ATO, we recommend a few practical steps to help you meet your payroll governance obligations. These include making sure you have a payroll framework with clear roles and responsibilities, especially for depot managers and admin staff. Have automated systems that calculate super based on correct OTE definitions. Regularly review systems and controls to ensure accurate reporting of super guarantee, pay-as-you-go withholding, fringe benefit tax, and single-touch payroll, also known as STP. Provide training for your payroll staff on super obligations and relevant awards. Reconcile STP data with your activity statement and payment records to avoid discrepancies, and always maintain and keep good records. Poor governance can lead to underpayments, reporting errors, and audit risk, none of what you want slowing down your operations. So make sure you understand your obligations from the start. Set up your payroll arrangements correctly in your payroll software, have the right documents and systems in place, and use systems that suit the way your business operates. Now, I have shared a lot of information so far, but I do want to call out one webpage for you to consider. It's our Simple Checks for Super Success checklist. It's a great resource that steps you through all the essentials of paying super and has some great videos you can watch. The final thing I'm going to touch on today is payday super. The law for payday super has been introduced, and if it goes ahead, it's set to start from the 1st of July 2026. Now, it's not law yet, but now's the time to get familiar and start planning. So, what is payday super? Well, you'll need to pay your employees super at the same time as you pay their wages. No more waiting to pay quarterly. And here's what you'll need to do. Pay super at the same time as salary and wages, whether that's weekly, fortnightly, or monthly. The super needs to reach your employees' funds within 7 business days of payday. If you're onboarding new staff or paying to a fund for the first time, you'll have 20 business days for their first payment, and improvements will be made to the system to help reduce errors. But you don't have to wait for the law to pass. As I said, get your business ready now. As part of these changes, the Small Business Superannuation Clearinghouse will be closed from the 1st of July 2026. While this closure is some time away, we're encouraging small businesses to begin considering alternative options to make their super payments ahead of the closure date and to consider what alternative will work best for their business. These include commercial or super fund clearinghouses or payroll software. Your current payroll software might already have this option available. Remember, for the latest updates and resources, visit our website and follow the ATO newsrooms and social media. So that does bring me to the end of what I wanted to share today. I thank you for your time.